Many believe that the rising yield could mean that the end of this hiking cycle. Are you in this camp too?
Well, I am. I think rate hikes are done for the year. I think Jay Powell, while he does remain hawkish in tone, and given some good economic data, he may remain hawkish. I don't think they're going to raise rates at the next meeting. San Francisco Fed President Mary Daly said it herself, and no one argued this point on the Fed, that the spike in the yields really did the work of the Fed for them, and if they were to raise rates again, maybe it would cause more of a panic, and that could be a problem.
The 10-year yield continues to flirt with the 5% level. Where do you see the rates are heading?
Yeah, well, we're hoping that 5% level is the top, at least over the near term. It is the one thing that has been driving this market. As the 10-year rallies, the market sells off, and that's what's been really the catalyst to the downside, especially for the small caps and some of those large cap growth stocks. I think the top is in for the year, so our fingers are crossed that this spike has done the work of the Fed, and the Fed doesn't raise rates, and then we can see a little bit of a sell-off into year-end.
What is the logic behind the 10-year yields rising?
Yeah, well, the logic is we're going to have higher rates for a longer period of time, and that 5% may not be as high as they go. They could go much higher than that. Historically, and now over my lifetime, I have to go back to the late 90s, very early 2000 to have an environment where we've had rates this high. These are the highest levels since 2007, before the great financial crisis. So a lot of new investors aren't used to this, and it could become the new normal.
And what does that mean to the equities? Obviously, the market has been tumble for a while.
Yeah, well, equities have been rather resilient given the spike in rates. It's the speed of the move that causes the market to really retreat. And then once things kind of resolve and they stay in this normal range, then the market seems to catch up. We just want that normal range to be under 4.5 would be ideal. But right now we're just over 4.85% and hoping it goes lower.
How to invest in a higher than longer environment, as you said, and also does that affect your strategy right now?
It does over the short term. It depends what kind of investment time horizon the investor we're talking to has. You look at some of these downdrafts as opportunities, because over the long term, the company has proven time and time again that it gets things together and it's still in that high growth multiple. That's why it's one of our large caps. So I always tell investors who worry over the short term to have the long-term strategy, to think, well, buy what you know, buy what you use, buy what has, you know, a good balance sheet, and think long-term. But for us in the media who watch every single tick of this market, it is a challenge. And if you're a little nervous, then it's not a bad time to go into treasuries because they're yielding so high, and you have that 4.5–5% return that may make you sleep a little bit better at night.
What is your asset allocation be like right now?
The vibe that I'm getting is people are a little more risk averse right now. There are people sitting in cash, moving out of some of those names that they've had high profits in over the first half of the year, and finding safety in treasuries. And people are also a little skittish about geopolitical events, and they have cash on the sidelines just in case something does happen. There could be a buying opportunity in this market.
As for the US dollar, do you see any downside room after it has been strong for so long time?
The dollar has been very strong, and that's affecting some of our global consumer staples a little bit. I don't know how much higher it's going to go over the near term. Like the rates, you know, it's gone fast. It's made a quick move, and it should come in a little bit between now and year end. I think the dollar has kind of reached one of those higher thresholds for the near-term future.
What about the earnings season so far, especially those big techs who has heavy weight in major indexes?
Well, earnings season has been mixed, and what I'm noticing is that consumer sentiment, listening to these earnings calls, is they're focusing on any negative aspect that comes from a company. Meta, for example, they had a great quarter, great earnings. But when they guide and they show hesitation and they say, we have concern about geopolitical events, people are selling first because they don't want to hear it. It's not when these companies report, what have you done for me lately? It's what are you doing for me in the next 3 to 6 months? And I think the selling was overdone. So the mentality, the sentiment is sell first, ask questions later. And when you hear concerns, given geopolitical clouds that hang over this market, people are more in a seller's mode right now.